Hello, and welcome. Today we're going to challenge one of the most common, yet most destructive myths in investing, the idea that you must sell at the absolute top to be successful. It's a tempting fantasy, isn't it? To perfectly time the market, cash out at the peak, and watch with satisfaction as the stock pulls back. But I'm here to tell you that this mindset, driven by greed and the pursuit of perfection, is a trap. The biggest foe we face in the market is not a sudden downturn or a bad earnings report. It's the person staring back at us in the mirror every morning. Our own emotions, fear, greed, hope, and regret are what derail even the most well-researched investment plans. The constant pressure to sell at the absolute peak creates enormous stress. It forces you to watch every single price tick, turning investing into a high-anxiety game rather than a disciplined strategy. In fact, I haven't looked at my account value during the day for years because it gets in your head and pushes you to make emotional, impulsive decisions. The truth is, if your goal is long-term success, the best time to sell isn't at the top. It's on the way up. The strategy is called selling into strength, and it is one of the most powerful tactics for protecting your capital, and just as importantly, protecting your mindset. Let's explore why this disciplined approach is superior to the fantasy of timing the top. When you buy a stock based on a solid setup, let's say a clean and simple flat-based breakout on a big volume increase, like we've seen on charts for Meta or Boeing, you're buying because you see potential. You've identified a point where the path of least resistance has changed, where buyers have overtaken sellers, and you're getting in line with that momentum. As the stock moves in your favor, the emotional landscape changes. The initial excitement of a good entry can quickly turn into the fear of losing your unrealized gains. Or, on the flip side, greed takes over. You think, maybe it'll go even higher, and you hold on, even as warning signs appear. This is what one of our community members, Brad, correctly identified as a failure to ride with trends. Selling into strength is the antidote to this emotional roller coaster. It's a predefined tactic that removes guesswork and emotion from the equation. The core principle is simple. As a stock makes a significant move up, you sell a portion of your position, perhaps a quarter or a third, to lock in a guaranteed profit. Why is this so effective? First, it immediately reduces your risk. You have taken money off the table. This profit is now real. It cannot be erased by a sudden market reversal. Second, and this is crucial from a psychological standpoint, it lessens your stress. There's a great quote from an old trading book. If you're losing sleep over your stocks, sell down to your sleep point. By taking a partial profit, you've eased the mental burden. This leads to clearer thinking and better decision-making for the remainder of your position. You're no longer operating from a place of fear. And third, it allows you to let the rest of your position work for you. This is a critical point. There's a lie on Wall Street that says, you'll never go broke taking a profit. That is an outright lie. You will go broke if your losses are consistently bigger than your profits. The goal is not to limit your profits, but to limit your losses. By selling a piece into strength, you've secured a gain, which gives you the psychological freedom to let the remaining shares ride the trend. Trends pay more than all the individual decisions you will make. Look at how a stock can follow a rising moving average, like the 8-period or 21-day exponential moving average. Your job isn't to guess where that trend will end. Your job is to stay with it. Selling a portion of your shares makes it dramatically easier to do just that. So, how do you implement this? You need a plan. Let each investment decision stand on its own merits based on rules, not emotions. Your plan might look something like this. Rule 1, define your profit target for an initial sale. You might decide that after a stock is up 20% or 25% from your entry point, you will sell 1/3 of your position. This is not an arbitrary number. It's a disciplined rule that you follow consistently. Rule 2, use the chart as your guide. Let the price action tell you what to do. For example, if a stock has a powerful, fast advance far above its 8-day moving average, that can be a sign of short-term exhaustion. That's an opportune moment to sell a small piece. You're not calling a top, you're simply taking advantage of a surge in price and demand. Rule 3, let the remainder ride. With your cost basis lowered and a profit locked in, you can now manage the rest of the position with less emotion. You can place a stop-loss order, perhaps just below a key moving average like the 21-day EMA, to ensure you never let a great profit turn into a loss. This allows you to capture the majority of a major trend without the stress of trying to time the exit perfectly. This entire process is about shifting your mindset. Instead of trying to be a hero who perfectly calls the top, you become a disciplined manager of risk and probability. You focus on a process that is repeatable and psychologically sound. Remember, we are looking for high probability setups, and that applies to our selling strategy as well. The biggest part of this game is what's between our ears. Protecting your mindset is as vital as protecting your money. By selling into strength, you are doing both. You are paying yourself along the way, reducing stress, and positioning yourself to ride the truly big winners for much longer than you otherwise would. Stop trying to sell at the top. It's a recipe for anxiety and missed opportunities. Instead, adopt the mindset of a disciplined professional. Have a plan, follow your rules, and sell on the way up. It is the key to consistency, clearer thinking, and long-term market success.